Well, holy smokes, I was not expecting to have to go live, but Nvidia and the chip sector is down by some over $550 billion. This is the biggest one-day semiconductor drop that we have seen since March of 2020. Remember when COVID collapsed markets? Today is the worst day we have seen in semis since March of 2020. This is insane. Mind you, more than half of Nvidia's revenue comes from just 4 sources, and folks are now wondering, is it time to take cards off the table for semi-stocks? And as Goldman says, potentially move into software. I have my opinions on that, but let's understand a few things just to think about for a moment. Just some food for thought that I'd like to say. First, think about this. Elon Musk with XAI just finished installing over 200,000 of these $30,000 chips. To make the math simple for you, that's about $6 billion, which basically means 100% of the money that Elon Musk raised in May got dumped into pretty much Nvidia chips. And then, of course, some CPUs and server racks from Supermicro and Dell, maybe accounting for a couple $1 billion along with that. The question is, what does that buy you? And that is the mindset that investors are starting to have today, is if Elon Musk can put together an AI company at the drop of a hat and double his AI capacity in Memphis by running gas turbine generators potentially without a permit, yeah, they might be getting in trouble for that, but whatever. If he can get all that up and running in 122 days, now it's up and running, it's like, cool, you've designed the restaurant. You've come up with a menu. You've come up with, buying ovens, and you bought all the ovens. Now, what are you gonna do with it? What are you actually gonna serve us? A free add-on to the X verification premium people had already been paying for, called Grok? Okay, cool. Like, Google has one, Microsoft has one, OpenAI has one. Like, is that actually sustainable AI investment? And I think that's the question that is being brought up today. And it's one of the reasons we see Nvidia stock now down 9.3%. In fact, if you look at the lines right here, you can see we ran up into no man's land. But once we lost this 125 level, we shot right back to about that 108 level. Bitcoin was actually a little bit of a leading bear indicator here, and it nearly perfectly double bounced at my 57,580 line. If you're not already tracking these lines, I'd suggest maybe writing down where the numbers are. You can copy them for free. Obviously, past performance doesn't guarantee they're always going to keep bouncing off these prior lines. This morning, played some good shorts as well with course members, up 69% on a short we had. So if you want to learn more about those and those notifications when I see trends and I send them out, make sure you're part of the Stocks and Psych group. But take a look at this. Tesla into the close. Tesla was one of the only Mag 7s actually holding up green today. It's now down 1.5%. And this is despite the fact that Tesla wants to increase manufacturing output in China, which is actually a very smart thing to do because China's manufacturing industry, as The Economist puts it, is in a straight up recession. And frankly, it's a lot cheaper to manufacture in China because there's so much excess capacity, which makes sense. I hate to say it, but think about supply chains kind of like getting really, really overweight, like obese, and then losing weight really fast. Like basically you have all this capacity for extra fat, and then you lose a bunch of extra weight really, really quickly. And it's like, oh, I have all this extra room for fat, but I don't have any fat left, like demand. Now all of a sudden you have these kind of droopy and sluggish and sagging supply chains that are like, we are so capable of stretching right now, like, please just give us more business. And we're just not getting it. And so when you think about this XAI analogy, a lot of people are wondering, wait a minute, if Elon Musk just blew $6 billion in chips and now the data center is up and running, what does that mean going forward? Because now Elon Musk is no longer buying more chips, at least as far as we're aware, for XAI. So what happens once the data centers are built? Let's talk about that after we listen to the bell, because tradition.
And we were on new high watch for the S&P, which got close too. Not today, as September begins. We'll be red, decidedly so across the board. I'll see you tomorrow into OT with John.
Whew. Reminds me back when I got to ring the closing bell. It's kind of cool. It's a cool tradition. Shout out to the New York Stock Exchange. Look at that dirty close, though. NASDAQ 100 Technologies Index down 3.04%. Nvidia closes right on Kevin's line, 108, down 9.5%. Tesla down 162. You've got DJT down 7% at $18. Ubiquity actually holds up at 195. Palantir knocking down 3%. You've got Apple and Amazon, I'm pretty sure, hit as well over here. Let's take a look. We got Apple down about 2.7, not so bad. Amazon down about 1.3, and IWM small caps down 3.03%. Basically matching the decline of the QQQs, the triple Qs. Now, what's remarkable about this, and I want to get back to the AI data centers for a moment, but keep in mind that there are, some people call them paid permabulls that will never change their mind and they'll just always be bullish. But some people were very supportive, and they were sending me articles going, you know, Tom Lee called for small caps to rally 40% on July 16th. Well, July 16th was like the top of IWM, one of the tops of IWM. You can zoom out and see that here. And, you know, July 16th was right here. That was July 16th right here. We're supposed to rally 40% from there per Tom Lee, but now all of a sudden he's upset that people are hating on him because people warned, hey, maybe buying small caps going into a recession is a bad idea. But he wouldn't know that perspective because he blocked me. What a baby. But anyway, let's understand this for a moment. If you have AI servers that can be built in 122 days by people like Elon Musk, you're not actually really creating anything new if you think about it. What you're really doing is you're like buying the stoves and the countertops off the shelf from another company. It's not like you're actually creating something new. Now, what you end up doing with those countertops and what you end up doing with you know, those ovens, that's the key when it comes to AI. But the question again is, if Elon Musk in 122 days can add 100,000 chips, who knows, the information suggests maybe he's embellishing. But if Elon Musk can add that many chips in 122 days, which is 4 months, then you have to ask yourself, what can competing companies or countries do, first of all, in terms of potentially eradicating any kind of moat that Elon might have with an XAI? But the second question is, what happens for an XAI now? Once you've built the server infrastructure, what is the next phase of growth? And that's the big question that people have now, is once the servers are built, what do people do with them? And this is where a lot of folks have to ask themselves, okay, so we build a better chat GPT? Well, OpenAI already has that. In fact, OpenAI, I mean, in my opinion, has a great chatbot program. It's fantastic. It helps a lot of customer service businesses provide customer service at a substantially better scale. Look at Klarna, considering that they could lay off potentially 60% of their staff because of the benefits of chat AI. That's great. But what happens when chat AI becomes a commodity? This is one of the issues that I think a lot of folks forget. Now, think about this. This AI spending has been, in my opinion, what's been keeping us out of a recession. But once the servers are up, once the AI servers are built, what are you cooking? And if you're cooking stuff that people don't care about because it's a commodity, is it worth additional investment? And is there a risk of a collapse of chip revenues? Consider some of my responses on X today. Somebody wrote, dollar cost average the XAI spend over 10 years, and it's only $800 million to $1 billion a year, which is expensible on a 10-year forecast. And I replied, unless the technology becomes a commodity and is worthless after 2 years, or worse, is already a commodity. Like if I started a startup tomorrow and I'm like, hey everyone, I'm getting into the chat bot building business and I got a $6 billion investment to buy a bunch of Nvidia chips and Supermicro servers. The first thing people are gonna go is say, what makes you different from OpenAI or, you know, Microsoft's partnership with OpenAI via Copilot, or what makes you different from what Meta's doing with Llama? What makes you different from Grok? What makes you different from the other GPTs, so to speak, that already exist? And then the question becomes, maybe we shouldn't throw another $6 billion building another server stack. And this is compounded by what Dell told us what Dell told us on their earnings call. And it's not so much what Dell told us, but it's what Dell didn't tell us. Look at this for a moment. I wrote, shocking lack of professionalism by Dell, by the senior VP and the CEO when pressed on AI-related margins. They were asked, hey, why are your backlogs flat? Well, probably because if you consider for a moment that Dell was bragging over their partnership with xAI and having been able to supply about 50% of the server stack, like the actual infrastructure stack, for xAI. That's great, but wait a minute. What happens if xAI is now done building the server stack? And Dell, you were bragging about providing 50% of the racks for xAI, and now all of a sudden, xAI has built out their data center and they don't necessarily need to keep buying from Dell, right? This is what's so different about data center recurring revenue compared to like iPhones. Every year people buy new iPhones in a product refresh cycle, or iPads, every 2 or 3 years, or watches every few years. Do we really need to, once we build out AI infrastructure, have to rebuild every single year? Like, do we have to upgrade all our H100s to Blackwells? Probably not. And that's what a lot of people are starting to wake up to. This, by the way, is that article right here where Dell argues that they provide about 50% of the chip or the sort of stacks for xAI. You can look it up, Dell and Supermicro to support Musk's xAI supercomputer. Okay, great. But again, once it's built out, you then start wondering, cool, Dell, where's your next revenue set going to come from? And then that's when we realize, oh, that's maybe why y'all are a little bit fussy on the earnings calls when people are asking you about a flat backlog, because now that xAI isn't buying server stacks from y'all anymore, your backlog is flat and your AI revenues are going negative because your big customers are like, thanks, bro, we built it out. Now we're done, which means year-over-year returns in the future, frankly, for companies like AMD, Nvidia, Dell, and Supermicro might be really positive for the last few years, but might go super, super negative for the years going forward. That's the big fear. Take a look at the attitude on these earnings calls. So here you have a question about the decline in AI server revenues and a flat quarter-on-quarter backlog in AI servers. They're wondering, is this because of Blackwell delays? And Rob's response, who's the senior VP over at Dell for IR, says, all right, you're killing me on the multiple questions. Then proceeds not to answer the question. Then another analyst called Ben also again asks about AI server margins and why the backlog is flat. And the CEO jokes, that was the greatest one question at a time of 5 I've seen. Rob, that was a classic, Ben. In other words, the executive staff are making fun of the analysts. And it's insane to me. It's a sign that as soon as these cloud service providers start cutting back on orders, because like they've built out their stacks, xAI builds out a stack, Meta, Amazon, Google, they build out their stack and they're like, cool, now let's bake some cakes with this. Once that stops, you have an oopsie doopsie in terms of year-over-year growth for the actual cloud infrastructure plays like the Nvidias or Supermicros or otherwise. Now, Goldman Sachs this morning suggested that people might be moving from semiconductors into software, and maybe that's the rotation that we're seeing today. I don't necessarily know if that's true because I personally think the best software play right now is Palantir, but I don't own any Palantir, and I'm not short Palantir, but I don't own any Palantir right now because I'm actually nervous that what happens as soon as the CapEx cycle dies, and when the CapEx cycle dies, we get a bunch of layoffs. That's a big thing that I think people aren't pricing in right now. People think, oh, the Fed's gonna cut rates, everything's gonna go to the moon. Not necessarily. And that's the big oopsie doopsie I think folks aren't paying attention to. In fact, I went ahead and replied to somebody who had this sort of thesis. Take a look at this. Somebody on X wrote, this is a dumb take, meet Kevin. Okay, whatever. And then they say, the logic is very simple. The Fed cuts rates, money flows out of money market accounts and back into the market that'll be distributed through the market. The Russell is lagging compared to others, so yes, 40% end of year is likely. Okay, here says Mike, who looks to be about 12. Thank you for following. But I reply and say, look, this assumes that your idea isn't already priced in, right? This idea that, oh, there's all this cash on the sidelines that's going to flow into the stock market. Let's buy stocks. So people buy stocks in anticipation of that money flowing in, and then it doesn't flow in, and then you're screwed. In fact, the volatility that we're seeing on days like today screams one giant thing to you. It screams to the market that there is a lack of liquidity. If there was so much money on the sidelines available to buy the dip, we would not have Nvidia down 9.5% on one day, because there would be money on the sidelines available to buy the dip. The reason you have these collapses in prices that are of such large magnitude is because people are already invested. And this is evidenced by investable cash being at record lows. We already went through this. BCA research, we covered this back in July. BCA research made it very clear that investable cash for households is at absolute record lows. Here's the chart of that. Not only is investable cash for households at record lows, going all the way back to the dot-com era, but investment organizations like hedge funds or financial advisors also have record low cash to allocate to stocks. So what's with all the money at money market funds? Oh, surprise, surprise. It's cash and cash equivalents at companies like Amazon or Google or Facebook or Warren Buffett or people who have a crap load of cash that aren't buying the stock dip. So it's totally different money, and people forget that, and it's really bad. But that's okay. It's one of the reasons why, like, we're not trying to always be perfect about the market or right about everything. My goal is always to add perspective. It's one of the reasons we're starting a financial advisory business where we can consult our clients right here at stockhack.com, where we can consult our clients. This is just an interest list at this point, where we can consult our clients on how to build their long-term wealth, whether it's balancing into the S&P 500 or the NASDAQ or whatever, but balancing that with being protected in a recession, being protected with real estate, diversifying a proper portfolio, whether it's with bonds or precious metals or whatever it might be, being diversified and protected. And so we're offering these consulting services starting October 1st. If you want to learn more, just drop your info at stockhack.com. The fees are over there as well, and we're trying to be very transparent and helpful to our clients. Keep in mind, it's a consulting service, so it's not like a fund where we're like, we're gonna beat the market. It's literally like we're trying to look at your situation and try to help you build long-term wealth and retire. But anyway, going back to this argument for a moment, this individual on X assumes that his idea is not already priced in. He assumes that investable cash is available for stocks and assumes that there won't be a recession. Well, if there's a recession, all of this goes to poopy doopy. And first of all, the worst thing you could possibly do is invest in my opinion, is invest in small caps, because small caps are substantially more sensitive to a cyclical cycle of recession. Really bad idea. So not something I'm super enthusiastic about. Now, somebody else mentioned the following, which leads into my comment sort of on joblessness. Somebody else left a comment on X and said, will Nvidia really be affected if we are in a recession? It's not like quote unquote people are buying their products. And I replied, it all comes down to CapEx spending. Once AI infrastructure is built out, like what we saw at XAI with Elon Musk, the risk is that CapEx spending stops dramatically. Is Elon Musk really going to get another $6 billion to go buy a whole nother round of 100,000 data center chips? Or does Elon Musk now need to prove that CapEx that he spent is actually going to start making money? Well, I think Elon has to prove that they can actually start making money. And I understand that they're integrating Grok for free over here on X, but let's be real. Who cares? Is that worth a $24 billion company at XAI? Probably not. It's probably all euphoric. Frankly, a lot of it could be wasted money if AI doesn't get boosted to the next level. Do I blame Elon for jumping on the AI bandwagon? Of course not. I actually think some of the best AI that exists is Tesla AI, Tesla Vision, and Palantir software suites. I think these are some of the best practical, real AI applications that exist. Do I think Grok is worth the money? No. I mean, who knows? Maybe it could be licensed to Tesla. Who knows? Tesla's also got its own, Nvidia infrastructure investments that have been made. But even Tesla stopped investing in Nvidia infrastructure because after they built it out and they had enough chips, they stopped. Anyway, so I respond, once AI infrastructure is built out, the risk is that CapEx spending stops dramatically. That doesn't mean they're not going to renew chips over time. It's just that now Nvidia growth could potentially turn out to be terribly negative. So now all of a sudden a company that you think has a two peg, all of a sudden actually has an infinite peg because it's now growing negatively, which is, in my opinion, quite likely. Don't get me wrong, the cash that Nvidia has been generating is phenomenal, but it just doesn't last forever. Then I write, the only way to sustain the CapEx investments today is either, one, leaps in AI technology, which we might AI plateau, frankly, or someone buying AI tech. In other words, like, a consumer buying software and continuing to be willing to keep buying AI technology. The problem with AI is it's like self-destructive, right? An enterprise that buys an AI software for 100 users might actually replace the need for 700 or 800 or 900 other subscriptions. Call it a 10-to-1. So you get 100 users on AI stuff, 900 all of a sudden aren't needed anymore. Now you're actually net canceling more software subscriptions than you're adding, which is one of the reasons why I'm bearish on this idea of, oh yeah, let's go from chips to software. Don't get me wrong, absent a recession, may be a good idea. But let's keep this in mind. OpenAI was considering working with Taiwan Semiconductor to build an in-house fab, like their own fab, and they canceled the deal to make their own fab because of profitability concerns. It's not going to be profitable to manufacture these chips forever once it becomes that fat commodity that we described earlier. And that's the concern, is that once, if CapEx and manufacturing expands so much to such bloat, and then all of a sudden demand rapidly compresses because the infrastructure has been built out, we'll have a lot of spare capacity. When we have spare capacity, all of a sudden $30,000 Nvidia chips won't sell for $30,000 anymore. They might sell for $10,000. It costs about $7,000 to $8,000 to build an H100, so at a 20% premium, cool, still great money, but it ain't, 4x, which is what you're seeing now, these sort of heavily inflated valuations on the products because of supply shortages, because you've got people like Mark Zuckerberg going, we can't afford not to invest in AI. Great, but at some point, that buck stops. So again, we talked about XAI and sort of the build out of infrastructure stacks. We talked about concerns over a Dell. We talked about volatility warnings, especially going into an election cycle, because there's a lack of liquidity. People think there's all this cash on the sidelines. It's smoke and crack, in my opinion. There's not a lot of investable cash on the sidelines. So that's a big risk, especially going into an election cycle. Trust me, I don't want to be bearish. It is much easier to just make bullish videos all day long and go, don't worry everyone, everything's going to the moon. But I'm much more of a fan of right now just being a little patient and a little conservative, but that's only if you're interested in macro trading. Otherwise, just focus on the big scheme of building wealth, right? Diversify your investments, whether that's bonds, money markets, cash, real estate, stocks, whatever you want, and then don't stress all the small stuff in the fluctuations. The fluctuations will drive you nuts, especially if you're all in on one stock. So be careful about that. But anyway, volatility warning, we talked about XAI, we talked about, Sam Altman. There was some idea that there could be a concern by Sam Altman about maybe falling behind Elon Musk. And there are some people who think there's this competitiveness between companies, but ultimately valuation is going to at some point be built on profitability. And unfortunately right now, AI profitability is it's really limited to Nvidia. The problem is, people might be front-running Nvidia's decline because they go, if AI isn't profitable at the end of the day for the end user company, then at some point, those premiums on Nvidia chips will collapse, and that might be why we're seeing such a burn in valuation of companies in trading today. Look, for example, here on the day trade, you had Upstart burn 9.9%, Nvidia 9.5%. Mind you, this is a huge company, a $2.65 billion company. This company just burned about 10%. That's over $250 billion with a B gone in thin air. Trump SPAC down 7%. Enphase today down under the 113 line, 6.7%. ARM down 6.8%. It's somewhat scary. Even Dell down 4% today. So kind of wild. Now I want to look at the comments and see what some of you have to say. Remember, this Friday, coupon code expires for the courses on building your wealth. It's our Labor Day week sale. And go to stockhack.com to learn more about our advisory service coming October 1st. You could go to our Discord for free. It's metkevin.com/chat. And if you go to the bottom in the Meet Kevin General channel, I actually opened a little channel. I just made it like a few minutes ago. And it's called Stock Hack Questions. So if you have questions, you'll be able to reply there. So just go to metkevin.com/chat. You can get it in the Discord. And somebody here writes, is advice on tax write-off strategies included? Yes. So just an example of how we can interact over there on Discord if you have questions about that service. Okay, so somebody here says, lack of investable cash, rate cuts priced in. Could it bleed over into the housing market? Foreclosures on the table. It's unlikely that I think there are mass foreclosures on the table for highly qualified Dodd-Frank ability to repay loans. But there will be a housing correction in the COVID markets that bubbled up. There's no doubt about that, and it's already started happening in Texas and Florida. People are like, why did you buy a jet, Kevin? And I'm like, so when I go to Texas, I could go, holy crap, this place is about to crash. I did that last year, and I'm like, the writing is on the wall. This place is about to crash. Prices are plummeting in Texas right now. So it's just an example. XAI will slate OAI because they can quite literally look into the brain to research how it works, potentially training models via Neuralink. I mean, the thing is, like, we could have potentials all day long. Like, oh, Optimus is potentially going to do this, and Neuralink is going to potentially do this, blah, 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 blah. This is all like 10 years down the road, in my opinion. And if you're pricing that into your belief as the valuation of these companies, I think you might be making a big mistake. Steve here says, Nvidia closes down $280 billion in biggest one-day loss of market cap in history. Kevin, GPUs are the new CPUs. Will companies stop buying CPUs? No, they will buy even more. Same for GPUs. No, I actually disagree with you, because I think once the software stack or the infrastructure stacks are built out, the data centers are built out, and once you get to this point of massive spare capacity, you don't necessarily need more efficient chips. You need something to do with all those chips. It's kind of like, let's imagine you're going to open a bakery and you're going to buy 10,000 ovens. And then you start baking the best cookies in the world, and then nobody buys your cookies. I don't care how good your oven is. I don't care if the next oven is twice as efficient as the ovens you currently got. You ain't going to buy new ovens because you can't sell your damn cookies. That's the problem. And that's what markets are fearful of right now. Can it all flip around and maybe AI balloons to the next level? Yes. But once the structure is built out, you really need to have a profitable product to support continued buying and investment into infrastructure. Otherwise, it's a waste of money. Somebody here says, like, a membership fee. Yes, there is a membership fee to be part of StockHack, but you have to think about it this way. It's a consulting service. So imagine having an attorney on retainer that you're paying on a monthly basis, and then anytime you have financial advice questions or like legal questions in the case of an attorney, you call them up. Hey, help me out. What do you think about this? This happened in my life. What should I do now? It's so different than like getting billed per hour or per email. We're not doing that. So stockhack.com is a totally different product, and it's really, really good. My team, well, when I'm not in the office, like when I'm right now filming or right after filming or whatever, can always reach me directly on the multitude of devices that we have. So it's really cool because it's my team's going to be working StockHack, and I'll be available on the various different devices we have to make sure that I am always in communication with my team. We kind of go crazy with devices. But we do it because we're all about efficiency and getting SH9T done, we like to say, and doing things better. So we're really, really into just providing more value for folks. Good question, Zoe. Executives trolling the analysts. Yeah, no kidding. My iPhone has a Dell processor. Dell CEO having a brat summer. Some of these comments are funny. Yeah, let's see here. Somebody says, oh, GPUs wear out over time. Yeah, I mean, but you're talking years and years and years before some of these things actually wear out. Somebody here donates $4.99. Need your DD on what Fannie and Freddie Mac, if they'll moon with the Trump presidency. You know, it's so speculative. This isn't the place for it to bet on politics. You know, it's hard to say. I don't think much changes for Fannie or Freddie at all. I don't see anything there. If you want to add me as a crypto advice guy, I'm certified to give it. Oh, look at Car for Coin. Car for Coin, he's always here. He's always a big supporter of the channel. As much as I love Car for Coin, I'm not the biggest fan right now in the near term of crypto, mostly because as soon as Biden got replaced, we started seeing the unpricing of Trump, and it's just been a bearish short-term period for crypto, unfortunately. So what if Tesla starts making their own chips? Well, they're trying to with Dojo and then having them manufactured by TSMC. But who cares? I mean, it's literally like saying, you know what? I'm going to build my own oven to bake my cookies. Who gives a flying frack if nobody wants to buy your frickin' cookies? I don't care if you build your own oven, or if you have an oven that's twice as efficient, or if you have 100,000 ovens. If there's a limit to how useful AI is today, then the investment will stop. That's all this is. This is a market that is reacting to the fear that, oh my gosh, if AI does not prove profitable and at some point the investment stops, Nvidia and the AI bubble will pop and collapse. You must, in order to continue to evidence or to continue to justify further investment into AI infrastructure, you have to prove profitability. And I challenge you to show me how profitable XAI is. It can't be done because XAI is way negative. If they just spent $10 billion on CapEx, show me where $10 billion of revenue is even in the forecast of coming in. It's not. Don't get me wrong, I like Elon, but you just lit $10 billion on fire. And you need to actually start proving that you can make some money. And I don't think it's going to happen until AI gets to the next level. Some people asked me a while ago, they're like, oh, should we invest in OpenAI at $100 billion valuation? I'm like, no, not financial advice, but I'm like, this is such a bubble. Like the stuff is good. Like I love GPT, don't get me wrong, but it's a commodity. It's going to be built into your car, as they already are partnering. I think it's Volkswagen or someone promised to build a GPT into cars. It's going to be built into your car, your phone, your watch. There'll be 20 different kinds of AIs, you know, whether it's Adobe's or Facebook's or whatever. And they're all going to be like, how do we make money from this again? Like, why are you going to pay for GPT when you can get this stuff? Like, Google actually did this smart. When you Google a question, you know, I don't know, I'll try something. What is the history of Twitter? I don't know, I'll try something. Yeah, see, look at this, AI overviews. Instant, free, totally free. I get an AI overview. Here's some key events in history. I think it's wonderful. Like, this was very smart that Google integrated an AI overview right into this. Why the hell would I pay $20 or whatever a month if I can get it built into here? Now, for some people, for coding and for certain use cases, of course, I pay for ChatGPT Premium or 4.0 or whatever it is. But good Lord. Somebody here says, are you bearish on Affirm after its recent uptick? If there's a recession, my God, yes. Affirm will go bankrupt in a recession. Have you looked at the balance sheet of Affirm? They hold all their own toxic loans. Bro, let me just give you some free, non-personalized financial advice here. If we go into a recession and you lose your job, the absolute first thing you should do is stop paying your dumbass buy now, pay later loans. Just stop paying. You think they're gonna come repossess your vacation or your groceries? No, they're just gonna go bankrupt. So I'm not touching Affirm with a 10-foot pole if we go into a recession. Now, if we don't go into a recession and the Ponzi can keep going and the toxic debt bubble can keep blowing up, fantastic. Maybe Affirm will even double from here. Great. Do I want to take that risk? Hell no. It's stupid. It's moronic. It's dumb. Stay the hell away from that trash. Do you offer BNPL for stock hack fees? I'd rather not do that. I think that's where we'd probably have to have like, because we are not recommending anyone in our a financial advice group use BNPL for anything. Certainly not going to charge you BNPL for that. I'd say if you had questions or issues like that, email us at kevin@stockhack.com and let's figure out something, you know, for your situation. I don't know if we'd be able to help you while we get started, but maybe when the company scales out, there's something we could work out, like a, you know, a different tier or something. I don't think we'd be able to start with something like that. But no, I don't encourage people to use BNPL. I think it's a bad idea. Let's see. I need GPT built into Tinder to craft my intro and replies. Oh, Steve, no. Kevin, I agree with you on Palantir. When would you go buy the stock? After we determine if we're going into a recession or not. Do we need to go? Lauren says we got to go. Thank you, folks, very much for being here. I got to play the outro. Thank you. I appreciate y'all. Seriously, good luck out there. Sorry, there's so much poopy doopy out there. Did I do it?
Poopy doopy.
Don't fight, don't fight.
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage the ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker.